The Corporate Recovery and Tax Incentives for Enterprises, or CREATE Act, a landmark legislation that aims to reduce corporate income tax and rationalize fiscal incentives, has been signed into law by the President last month with line item vetoes. Just recently, the Bureau of Internal Revenue has released the draft guidelines for the implementation of the law. To further outline the salient provisions of the new law, here's our key takeaway from tax experts and resource speakers during P&A Grant Thornton's webinar on the CREATE Act.
So what's the objective of this CREATE? I know some of you are very familiar with this objective. First is to improve equity and efficiency of corporate tax system by lowering rates, widening tax base, and reducing tax distortions and leakages. Develop more responsive and globally competitive tax incentives regime, performance-based, targeted, time-bound, and transparent. Provide support to business to aid in the recovery from COVID-19 pandemic and strengthening our capabilities for similar circumstances in the future. And lastly, to create more equitable tax incentive system that will allow for inclusive growth and generation of jobs and opportunities in all regions of the country. For the corporate income tax, starting July 1, 2020, the corporate income tax will be reduced to 25%. However, it may further be reduced to 20% if the net taxable income will not exceed 5 million pesos, and take note it ends, so both conditions should be met, with total asset not exceeding 1 million, excluding land on which the business entity, office, land and equipment are situated.
As you know, we have Section 40C2, and that has been amended by the CREATE law. Under the amendments, the specific types of reorganization involving corporation will be covered by tax-free property for shares exchanges. So they have added two additional concepts which will be covered by the tax-free exchange. The two new concepts are recapitalization and reincorporation, which are also now tax-free. So recapitalization is actually an arrangement whereby stocks and bonds of a corporation are readjusted as to amount, income, or priority, or an agreement of all stockholders and creditors to change, an increase or decrease in the capitalization or debt of the corporations or both. The other new concept is reincorporation, and this is the formation of the same corporate business with the same assets and the same stockholders surviving under a new charter.
The tax-free transaction includes transfer of property to a controlled entity in exchange for cash.
If you do it for cash, then it's a sale. So that's a taxable transaction. So it should be property for shares, no? And you go back to the reason of why we have Section 40C2. Section 40C2, the principle behind that is that you're just changing the nature of your ownership from direct ownership to through a corporation, and that's why it's tax-free. But if you sell it, meaning you receive cash for it, then it becomes a taxable transaction.
As an investment house, we are currently using the 5% rate in the computation of our percentage tax. Is there any reduction of the tax rate under the CREATE?
Those below the VAT threshold. So supposedly, di ba, VAT ka, but since you're below the VAT threshold, so you're subject to 3%, and that's the one covered by the amendment, not the FI percentage tax applicable to FI.
A lot of your questions are still hanging, no? Because we're still waiting for the final draft regulations. I think may humabol pa dito na if the forms are not ready, what is their option? I think Wawi has mentioned that based on what the BRS said, they will allow you to input hard code the tax payable using the correct rate, and that's their pronouncement right now. What is really important is you visit the BIR website every now and then, and kami din naman for our part, if there is any regulation that has been issued, we try to get it out to you on the very same day. So please watch our website as well, and we do send out the tax alerts as soon as they are available, as soon as possible. So these are crucial times. We're gearing up to the filing season. So every day is important because we're getting a lot of sanay na tayo dyan with every filing season, we get a lot of new regulations as the filing deadline approaches, and more so this year because of the change in the rules and the change in the rates. So let's do our part, and our part will be to prepare for the filing and watch out for the announcements of the BIR. If there's anything new, we will get it out to you as soon as possible. Thank you very much.